G'day, Shane here from Team Penny at HKY Real Estate. Here we are again with Craig from Home Loan Republic. How are you, mates?
I'm good, Shano.
That's good. Good to see you again. Okay. Now, we've got our deposit saved. We're thinking about buying a property or getting into the market. What are some of the additional costs that we might not be aware of, mate?
Yeah, so obviously, good point. A lot of people come to us, they've saved their 5% deposit. I think I'm ready to go. There's a few other things they need to consider. So some of those things are obviously stamp duty.
The dreaded stamp duty.
Stamp duty. Government doesn't miss you,
Nope.
unfortunately.
Clip.
So with first home buyers, obviously, they get a full stamp duty exemption up to a purchase price of $430,000.
Yes.
So there's no stamp duty there, but it is obviously when you get beyond that price where these fees start kicking in. And depending on your purchase price there, you could be looking anywhere between sort of, $3 to anywhere up to $20,000 up
Right.
if you're up in that sort of 700,000 purchase price range. So it's important you understand what your stamp duty implications are.
Yep.
It's a big cost. The other one is obviously conveyancing costs.
So settlement agent.
Settlement agents, obviously their role is very important in the transaction. So what they do is obviously transfer the title from the previous owner's name into the purchaser's name, so you take proper legal ownership of the property. Obviously, different settlement agents have a scale of what they cost, but typically anywhere between $800 to $1,000 there.
Yep.
And one of the other ones too, obviously at settlement too, you pay like sort of pro rata council rates, water rates and things like that
Okay,
too. So
yes.
you might be up for a further couple of grand. So typically, in addition to stamp duty costs, we always say to our clients, probably allow about $4,000 or so to cover all of your purchase costs, and you're well and truly covered. The other one that probably clients don't think of so much is the lender's mortgage insurance.
Yes.
So if you're not going for like a government guarantee scheme, you will incur lender's mortgage insurance if you don't have 20% deposit. And typically that cost, lenders do capitalise that, but they typically only capitalise it to 95%, meaning instead of having a 5% deposit, you essentially have to have an 8% deposit
Right.
to cover the mortgage
So
insurance cost.
does that lender's mortgage insurance have to be paid up front?
It is paid at settlement.
It is.
Yeah.
Okay. Yes.
So basically, you are going to be paying that additional, 3% or whatever it might be,
Yep.
depending on your deposit level, at settlement in addition to your deposit.
All right. So would a good idea if I was looking to get into the market, I had my deposit saved, was probably go and speak to someone like yourself. You can run a spreadsheet of all associated costs so we know exactly where we need to be and where we need to head to.
When we're doing a pre-approve for a client or someone that's looking into the market, is like you say, give them a detailed funding table,
Yep.
outlining what their deposit is, what all the costs are, and give them just a bottom line as if you're buying a property for $500,000, this is the amount
This
of
is
money
gonna
you're
be
going to be
my
required to
costs.
have. So. If you're sort of starting that process of looking to get in the market, it's good to know a few months in advance as to what you're going to be up for, so you can obviously put your savings goals in place and get that done.
Very good. Okay, nothing like being prepared. If you would like some more finance information, check out Craig, details down below. If you'd like some real estate advice, we'd love to hear from you. Give us a call on 0418 911 256.